Hello, my friends, and welcome to the Jeremy B. Hill Show. For those that are on their way to becoming the best version of themselves, finding their own success, these are the real-life stories, the goods and the bad, the successes and the failures from those leaders who have made it and those that are still on the journey. Welcome to the show. Hello, my friends. How are you? Welcome to the show. Today, I am so excited to have one of the most successful real estate investors in the country. Good friend, John. Thank you. As the co-founder of a $20 billion family of private equity funds that owns more than 40,000 multifamily units, 12,000 senior housing units, 10 million square feet of office space, and employs more than 4,000 people. So when I said one of the most successful real estate investors in the country, I didn't mean your buddy in town that owns 4 rental properties. No, not the guy. Yep. John's got one of the most famous eyes for opportunity in the country.
Well, hang on. I'll clear that.
Yeah. We've known each other for a long time.
I'm
so excited. Mr. John Pennington, welcome to the show.
Glad to be on your show. I want to congratulate you on your success. Just clear up a few of those things you just said. So I am a co-founder of a $20 billion private equity funds, family of funds, but in no way do I take credit for the incredible growth of our company. I have incredible business partners, incredible partners that just understand real estate. Like you just can't believe these guys are incredible. And we have gone from, in 2009, we all came together really at a zero asset under management. We're well over $20 billion at the moment. Wow. And we've grown and grown, and in our office space, multifamily, senior assisted, and also in debt funds that are backed by those 3 asset classes also. So yeah, it's been an incredible ride, and we're continuing to grow because once I said, I have incredible, brilliant business partners, and that we're gonna get that a little bit later about building a team. Sure. I know you're a team guy. I'm a team guy, and I've always liked the team sports, and so we'll get into that, how a team gets built in the private equity world. So
that's incredible. So from zero in 2009 to a little over $20 billion today.
Yeah.
Dude, oh my God, I cannot wait. So for the audience that's not in the traditional private equity, most people it is know who you are, but for those guys, share with us a little bit about you and the business and some of the, maybe some of the asset classes it is that you see and kind of how this thing kind of came together a little bit. Tell us a little bit more about you and how you got started.
Yeah. So I'll go back. So we'll get into this a little bit later about gold. We're going to talk about gold a little bit and negative interest rates and stuff. But in 1971, when, President Nixon took us off the gold standard, backing our dollar, I see the economy contracting about every 10 years. You had the 1987 stock market crash, right? And then you had the 1999 2000 .com bubble, right? Totally. And about 2008 or 9, you had the Great Recession, boom. Yeah. And then in 2000, you've got the big boom. And it seems like since we've been on the debt, print money, it seems like you have these big contractions, boom, right? And what I've told my sons, and they're all grown now out of the house and they're very successful in doing their own funds and running funds and stuff, but is that when the world changes, that's when there's opportunity. And I'm getting around to the story. So I was in college in 1987, my senior year. I was about to graduate in economics at State University. And Ronald Reagan went to Germany. Do you remember the wall down the middle of Berlin?
Yeah.
Okay. And he says to President Gorbachev of Russia, hey, President Gorbachev, take this wall down, right? Yep. And my kids can't understand. And I said, guys, so once that happened, my first company right out of college and my 2 partners, I've always liked partners. I've always never been a sole proprietor, really like a team. My 2 partners, we started sending used Levi 501 button fly jeans to Eastern Bloc countries.
Button fly jeans, baby. I remember the button fly.
Yeah. And so, and my kids asked, well, why did they want the button fly? And I was like, well, guys, you gotta understand, before 1988-ish, when the wall came down in 87, 88, right in there, or actually 89, we took it down. So before that, the Eastern Bloc kids couldn't get American products. And they wanted the original jean. And the original jean was made by Mr. Levi Strauss in San Francisco, USA. And he didn't have a zipper back then. They made the button fly and they wanted the original.
Yeah.
And so the problem was for Levi, Levi was selling, $100 a pair in France and Austria, $100 for a pair for brand new. But in the 13 Western United States, they were work jeans.
Right.
In high school, if we were going to go do some concrete work, we would go put our 501s on,
Right.
So there were used ones everywhere. So we started buying, and it was about a 9-year run. And my partner moved to Southern Germany.
Okay.
And I had people over here in the United States. We'd buy them all over the Western United States. We'd sew them. It's one time we had, I believe, 13 full-time seamstresses that were repairing used.
Right.
40 hours a week.
Patching and everything, getting ready to send
40
them.
hours a week. Then we had a room where people scrubbed, worked chemicals in to scrub paint and tar off of them and clean them all up, and ship them over to Germany and sell them through all the Eastern Bloc countries. And we did that for that was my full-time job, business started right out of college for 9 years. Our best year was 1995. And in that year, you got to go back in time when 1995, when minimum wage was a lot less than it is now. But
Yeah.
we did, if you add up all the companies together, we did about $8.5 million of used Levi 501 jeans in 1995.
And I've got to think the used Levi market to overseas, crazy margins because you're buying them for nothing, right? These are guys' work jeans that they're tired of wearing, don't fit, have a hole, whatever.
Crotch hole, you buy a crotch hole and reweave the crotch hole. You buy a crotch hole for 50 cents, put $3 or $4 into it, ship it over there. The basic margins were this. I'm really rounding the numbers.
Sure, of course.
A new pair was about $100 back then.
In Europe, in Germany.
In Eastern Bloc, right? And a used pair right next to it on the retail shelf was about $60, $65. And so we would it was basically this. I would repair or get a jean ready to go, all cleaned up, and I would sell it to my partner, that company overseas, at about $21, air freighted a couple dollars. He would get it. He would sell it to the retail stores for $30, and they'd mark it up to $60. That was basically it. And so if I got a holy one, I rewove it. It was, $3 or $4 or $5. I'd sell it to him for about $14. He'd sell it. It was about those margins there. But anyway, that was my first business, very successful, and it was a fast moving business, and it was really, really fun. But it just died. I mean, what happened was a perfect storm. The dollar went strong.
Right.
The kids started wearing baggy jeans, and it was past the first Gulf War. And people in Europe were like, "Oh, the Americans, they're bombing."
Yeah, the blooms off the American rose a little bit.
Right. But I tell my kids, there was a time between 1989 and about 7 years, that period of time, where the whole world loved the United States.
Yeah.
Because the wall had come down, the Cold War was over, and there was a little window of time. And NBA, anything USA,
Yeah.
everyone wanted it, right? So,
This was back in the Dream Team basketball, right? Too. At
yeah, that's right.
Totally.
Yeah.
I remember that.
Yeah.
I remember that.
So my point is, when the world changes, there's opportunity. And back then, how did the world change? The wall came down.
Yeah.
How did I take advantage of it? Well, I wasn't in finance back then. I didn't really understand it. I didn't really understand what a securities was back then. And, stocks and bonds, I didn't understand it. Even though I had an economics degree, I still really didn't understand it. But how did I take advantage of it? I said, I can move product from the Western United States to Eastern Bloc countries, and I can make a margin. That's all. Is that simple. It was a lot more difficult than that. But anyway, that's how it came to be. So over the years, and then I was a stockbroker for a few years. I was a COO of a public company, a part owner of a public company, had about 140 employees.
Wow.
And then real estate. And then I launched my first real estate fund. It was a lending fund in 2005, and with a couple partners. And
I think that's when we met, way back in the day.
Yeah. Way back in the day, them, yeah. And then we launched our second fund in 2007. And then in late 2008, we launched our third fund. So our first two funds were lending on real estate.
Okay.
At the end of 2008, we were like, there's no more lending. We're going to start buying this stuff because banks are taking stuff back. Cash is king. So we launched my third real estate fund, which is a purchasing fund. Okay. And a group of people came together, all my partners that I have today, and they came together in January 2009. And we came together we all had real estate backgrounds, but we all came together with the SEC regulated assets under management. We had 0 assets under management. And today that company has over 20 billion assets under management. And so that's kind of how we launched.
You put together your own dream team.
Yeah. So, but again, the world changed in 2008 and 9, right? And again, I took advantage of it. Now I missed the .com, right? In the year 2000, I didn't figure out how to take advantage of the world back then. But when the world changes, you can take advantage of it. And we really, really took advantage in 2000.
Yeah, 100%. Well, coming out of the great financial crisis, right? You had, especially for your business, right? Real estate's a function of the availability of credit typically, right? And so when credit markets are flowing and doing well, real estate's kicking ass and doing great. And when credit markets are wonky, it's real estate's kind of in flux, right? And so coming out of that, for you and your partners with the reputations it is that you have and putting guys together it is that have access to capital and expertise, both in multifamily and seniors and this kind of a thing, it was almost a perfect storm to really go start buying assets. And so companies today, even as successful as Apollo was, and Colony and these guys were, a dozen-ish years ago, right? You've seen this kind of meteoric rise from the kind of opportunities it is that they took an advantage of, no dissimilar to you, coming out of this 8, 9, 10 kind of world, right?
But in all of these, booms, right? I'll give you an example. 2009, 2008, I had friends tell me, "Oh, John, you're in real estate. We feel very sorry for you." And I was like, "What are you talking about?
What are you talking about? This is great.
This is the best time to be in real estate, right?" And they were like, "No, this is the worst time." And I was like, "I don't think we're reading from the same book here." Right. And then back in, the people were like, "Oh, you sell used jeans? Oh, I feel, I hope things are getting better for you, And I was like, they thought I was at a swap meet with a table with some used jeans on top.
Right.
I'm shipping off containers every week to Europe. And so it was, like I said, people just have different perspectives of crashes.
Sure.
And it's always bad. But like I said, when the world changes, there's enormous opportunity. You just have to have your antennas up and think, what is going to change and how can I get in front of the wave? And that's what I call the waves. I told my boys earlier, for the last 5 to 10 years, I said, look, when I was a younger guy, I give them this analogy, right? Mm-hmm. I'm standing in the ocean knee deep and I have my arms up and I'm trying to stop a wave from coming in, right? And I said, that's how I was when I was a younger man. But then when I got a little bit in business, I was like, I'm not doing that anymore. I'm going to get a boogie board and I'm going to go with the wave, right? Yeah, so whatever the wave is, you just got to figure out what the wave is and get in front of it and ride the wave, right? Yeah. And so when the world changes, there are waves and waves that you can ride. Yeah.
I think that's a perfect analogy, but that there is a point, at some point, where you were not as smart or as learned or as experienced as you are now, to where you're still kind of trying to fight the wave or control the wave or have more of a degree of influence over that, right? Like we're all hopefully smarter over time, right? Like I got diagnosed with a rare disease a few years ago called delayed intelligence, which means, I'm typically smarter, maybe next week than I am this week, right? Yeah. But for you, when your business was starting and you were primarily focused on the lending business, or even when the jeans business was starting and that kind of a thing, how, most guys as they're starting, even for your partners now, maybe it's a little bit, you got maybe a few more shekels in your pocket as you're starting this last one than you did the previous, but those first few years of either starting the jeans business or first few years of starting the lending business, how was that kind of just getting the flywheel started and getting things moving and starting to develop the momentum, keeping your head right along the way and all those kinds of things?
Yeah. So in my lifetime, I've started, I think 13 or 14 businesses. 3 have done extremely well. And obviously the one I'm in right now is extremely well. Jeans was extremely well. And 3 of those 13 or 14, I actually lost money on. And those right? If you're losing money on, you just kind of, okay, I'm not doing that one anymore.
Right.
And if you're making money, you just keep going with it. But the rest in the middle kind of made some money.
Right.
And those are the hard ones, right? Mm-hmm. Because you're like, if I just work one more year, I'm going to turn it around, right? And you don't know when to stop or when to quit, right? And so my general theme in life in the United States of America is, hey, I was born in the United States of America. And my wife is from Canada, and my oldest boy was born in Canada. And the day you come to the United States of America, the day you arrive is like a lottery ticket, right? Or the day because I really believe the United States of America has a fertile ground for business entrepreneurs. And what I've drilled into my boys, my growing up, since they were probably each 12 years old, this is my motto. And this is what I'm about to say is academic, okay? It's like 2 + 2 + 2 = 6. What I'm about to tell you is how I get up every morning. So this is it. Number 1, stay healthy. Number 2, get up every single day and try. And number 3, eventually you will succeed in the United States of America. Now, I know people who are not healthy, who are very successful in the United States of America. I'm not saying you can't do it. What I'm saying to you is it's academic. It's like 2 + 2 + 2 = 6. Now, you say, well, I lost money on three of my companies. Exactly. My goal, my trying every day wasn't to make each one of those business work. My goal was to be a successful entrepreneur and run a successful business.
Right.
So there's going to be nights, and there were nights that I went to bed crying on my big fat pillow, crying about how it's not working, but that didn't matter. If I get up the next morning and I try, in the United States of America, you eventually succeed. Now, I don't know how people do it. There are people in Nigeria, there are people in Thailand, and they move here and they can't even speak English. And in two restaurants and a laundromat, I don't know how they do it. If you moved me to a different country, I couldn't speak. I don't know how they do it. But the point is, America can do that type of thing. Now, what I told you is true in America. It could be true in Germany. It might be true in Australia. I don't know. I've never lived there. It could be true, but I do know it's true here. Stay healthy. Get up every day and try. Not 5 days a week, 7 days a week. And eventually you will succeed. Now, your success, you will change your success. Like I closed some companies and started other ones, right? But eventually you'll succeed. And that is the nuts and bolts that I've lived by, and I've taught my boys to live by, and I just drilled into their head. Think about this. I said to my sons, think about when you're 93 years old and you're sitting on some couch, retired, wherever. I don't know where you're going to be. I'm definitely going to be gone off this planet. Are you going to sit there and say, you know what? I had a business idea when I was in 25, but I didn't do it.
Yeah.
I had an idea to write a book when I was 35 and I didn't do it. I had another business idea when I was 45 and I didn't do it. Really? You're in America and you didn't do it. Why? It's like baseball analogy. I can get you to the plate because sitting on the bench, you cannot hit a home run from sitting on the bench.
Right.
I can get you to the plate, and sure, you have to swing the bat. I got you to the plate. America gets you to the plate, the big baseball game, but you got to swing the bat.
Yeah. And
if you keep swinging and you don't stop swinging in America, you'll eventually get a hit. You'll get a single, a double, a triple, and maybe even a home run. And that's kind of my motto of this great country.
That's fantastic. Well said. There's something there for just it's resilience and it's persistence, and it's as simple as it sounds, of just waking up every day and putting one foot in front of another, and like you said, stay healthy and try and keep on and keep on and keep on and keep on. There's an old saying about the water in the rock, right? It's the persistence of the water eventually breaks down the rock, and that's what formed the Grand Canyon, right? Is the river just continuing to go after it and go out, and it's just that persistence. There is something that cannot be undervalued about the person it is that just freaking shows up every day.
But I dare to say that if I was born in some other country in the world, I don't know which country, I could have the same attitude and never succeed in some other countries.
Yeah.
I can get up every day and try in other countries, and I would never have these, because the United States they've just ingrained in it the government, the laws, how it works, the financing, the ability to get capital in this great country is unprecedented.
It's remarkable. Yeah, good for you. during the journey, you know, I know for me and a lot of guys it is. I mean, you coach a bunch of people. Hell, you coach me. I call you, you know, years ago, you know, on my sob story and saying, John, I need, you know, you to be Dr. Phil for an hour or something, you know, right? But so all of us go through that. For you in the journey from 20 years ago to today, right? There's probably less crying on your pillow today, I'm sure, than there was, right? But at some point, those times when you're in your car by yourself, or those times to where it is that you're on the way to the meeting, or you're thinking, man, this guy's coming in, or this investor's coming in, or we're going to close this deal, or one thing or another, and it doesn't happen, and you're thinking, well, shit, it's another month with more month than money. How did you just keep your head right and keep going?
Couple things. I will go into team building here in a minute.
Yeah.
But me personally, I was always a very frugal person. I lived way below my means. When my friends were buying, nicer cars and taking their kids to Hawaii, I was driving a car with a dent in the door and taking my kids to the lake on a weekend with some chairs, right? Because, and this is the reason, because my underlying goal was I wanted to be a successful entrepreneur, and I knew I have a way that I could, live below my means and take care. When an opportunity came, I had to be able to take it. And a lot of opportunities in the United States of America require you to go without a paycheck for a period of time.
Yeah.
3 to 6 months and most of the successful companies, I think all that I have, it took me to jump in and not take a paycheck for a period of time, which a lot of people can't do. If you live above your means, you can't do that. And I kept living below my means. I had people, why you drive a car with a dent in the door? Well, just that's me. But really what it was deep down, I had in my mind, I was going to be a successful guy. Now, the second thing is teams. And my first company with jeans, I had a great team, 2 great partners. But go back to the baseball analogy. Let's say my goal, I want to be on a World Series championship team. Mm-hmm. And let's say I'm a pretty good pitcher. I'm not a great pitcher. I need to recruit a great pitcher. Okay. Mm-hmm. So I'm a pretty good fundraiser. I can knock on some doors and find capital from investors, but I'm not great. So how do I recruit a great partner who is a great fundraiser, right? So maybe, baseball analogy, maybe I know how to build a great stadium with the best turf and the best hot dogs and the best bathroom and the best parking lot and the best lighting, right? And the best advertising. And then maybe a pitcher will come and pitch for my team because most pitchers don't know how to build the stadium, but I do. So I build the fund. I build the fund structure. I understand the SEC. I understand the back office, which a lot of people don't want to do the back office, right? And I recruit a great pitcher. Now I'm playing second base. I'm a pretty good second baseman, but I need to find a great second baseman. So I do the same thing. I'm a really good outfielder. I run fast. I can catch. I can throw a long way. And so I want to play outfield. So I built a team, and my team members, as the pitcher came, the great fundraiser also. So it kind of snowballs. That's what happened in all my successful businesses. I was able to build the hub, start the hub, and attract people to that hub. And that's how I got all these great, great partners, is because, as you know, Jeremy, when you start telling people that you run a private equity fund, you go to a dinner party, usually, look, my other businesses, when I had before, I go to dinner party and say, even my jeans business, they'd let you talk about 3 to 5 minutes, and what do you do? Right. The only thing, and you know this, when you go, and you do this because you run your own fund. Now, when you go to a dinner party, you say you run a private equity fund, people will let you talk for 25 minutes, and you'll say, look, I want to talk about you. And they'll say, no, tell us more.
Right.
It's the only business I've been around. All my 13 or 14 businesses, I've never had one like this, where people are so interested in private equity. And so when we built the first private equity, up to the third one, my original partner started attracting these incredible partners that are absolutely brilliant. And that's why we went from 0 to 20 billion, because I have brilliant partners. That's the baseball analogy there.
I've always applauded that from you. And candidly, I've got a lot to learn from that. I think, myself, I've been victim of this or guilty of this. And I think a lot of entrepreneurs is that, when you start your business, whatever your business is, right? Whether you're private equity or credit or real estate, or you make coffee cups, it doesn't matter. but so many entrepreneurs want to hold all of it, right? Like, this is mine. I'm the boss. I own 100% of this. This is my thing.
Yep.
There's something to the saying of, if you want to go if you want to go fast, you go alone. But if you want to go big or something like that, you build a team. And so I know so much of what it is that I've witnessed from you and learned from you is your ability to attract the best people. And so for you as an owner, how did you view like the ownership or a partnership? I know that, great.
I wanted to go big. I just gave up equity. I just said, you know what? How much equity do you need? Come on in. How much equity do you need? I need you. It's like when you build a baseball team, right? Yeah. What do you need? I'll give up whatever I need to get you, because my goal is, if I have a baseball team that makes the playoffs every year and I own a big part of the baseball team, I'm going to make that much money. But I'm going to own more, right? Yeah. But if my baseball team goes to the World Series every single year, I'm going to own this much, but I'm going to make that much money, right? Yeah. And on top of it, and I know the word funner is not a word. I don't think it's a word, but it's way
fun. It is today. It's totally a word. Yeah. Totally a word.
It's way funner to be on a team that goes to the World Series every year, right? So it's fun. It was fun. Now, look, that's it. But my path isn't for everybody. Some people, look, Mark Zuckerberg, he's souped partners. Bill Gates had one part, but I don't know if they need a partner. They can do everything. They can raise capital, run the back up. They can do it all. I could not. I knew I wasn't smart enough. I was a B student in college, right? I knew I had certain skill sets, and I knew where I lacked certain skill sets, right? And I knew in 2005, when I launched that first fund with my first partner, I knew I wanted to go big. I didn't launch my first fund until I was about 40 years old, about 16 years ago. So I'd done enough in my life where this is my last run. I don't want to do something small. I want to do something big, and I want to go to the World Series, right? Yeah. On the baseball analogy. And so building a team was the only way to get there, because I knew that I didn't have all the skill sets to get there. I could raise, like I said, I'm a pretty good raiser, but I'm not a $20 billion raiser.
You can't do everything, right? You can't be the best at raising money, underwriting deals, packaging deals, originating deals, running the back office, right? You can't. Yeah. There's no matter how much you pray, God hasn't given you 25 hours in a day, right? I mean,
look, there are some people that can do it all. I'm just not one of those guys. But what I'm saying is, when you ask me what's my secret sauce, I know what I can't do. Yeah. I know I'm an okay baseball pitcher. I know I don't have a 95-mile-an-hour fastball, right? And I gotta find somebody with a 95-mile-an-hour fastball.
Right. So this goes back to the I guess two things. Number one, there is not a finite pie. So if I give to you, I'm taking away from me, right? If I give to you and I bring somebody else in, then there's the opportunity for the pie to get bigger, right? So just like you said, I go to the World Series every year. I would much rather do that, right?
Yeah.
And so I think there's that, but I also think that there's the having a degree of introspection to where you realize actually who you are, and you realize it is that these are my strengths, right? So I know for me, I'm good at 3 or 4 things. I'm actually really, really good at 3 or 4 things. But that means I'm probably kind of half-assed at about 300, right?
You broke up there. Say that again.
I was going to say, I know for me that I am really, really good in my business at 3 or 4 things.
Yeah.
But that means I'm kind of half-assed or mediocre or a B or C student at about 300. So I think oftentimes you find entrepreneurs that want to surround themselves with a bunch of people that are just like them, right? Yeah. And it becomes this little litany and fraternity of you're all the same people, right? But your business doesn't move ahead, because if you're great at originations, you need somebody that's good at underwriting. And if you're good at underwriting, you need somebody that's good at, marketing or back office or raising capital, or right. It's like you said, it's putting that baseball team together.
It's also building a team or business partners. It's not easy, as you've seen many in your lifetime. Many partnerships break apart. It's not easy. It's not easy finding the right people with the right culture that they can come together and actually function. Right. It's not easy to put that together. And some of my businesses that I failed at were I was trying to put people together that just wouldn't mesh together. Right. And those are some of the reasons that I failed in some of the businesses.
Yeah. And I was just going to ask that same thing. So in your endeavors, either previously on the lending side of things to now more of the equity side, I remember stories before to where it is that there was, we're trying to put this together and we've decided it is, we're going to partner with Joe, whoever Joe is, right? And he's going to help us do these things. And then 6 months into it, you're like, man, this guy is all hat and no cattle. Like he didn't do like, so we all endeavor. I mean, just like a marriage or anything else, right? Nobody gets married with the thoughts of getting divorced. Nobody comes into a partnership with the intent that says 6 months from now, we're breaking up. How do you deal with times to where it's,
so this is why I've loved the private equity fund model. In reality, my fund, we have 114 different funds that we run now.
Wow.
And they consolidate into about 17 funds. Okay. So the first 2 funds that I told you about way back when, there are some people, a few people that were with those 2 funds that weren't in the 3rd fund, right? Because each fund is kind of like a silo, right? And if some guy comes in and you say, or some lady, she's a partner or he's a partner, and they get like 10% of this fund and they don't do anything. But when you launch the next fund in about 18 months or a year, they get like 0.06% of, they get and that's the next fund. And then you see who produces. And then by the 3rd fund, we had all the producers, right? And then we were just, boom, took off and we've added from there, right? So that's why I like the fund model. It's not like one company is going to own everything. You have a fund and the same group of people fund. It's the same basic investment thesis, but every fund has a new general partner and each fund has a new general partner. So the 17 or so funds that my company runs that 14, but they consolidate on 17. Have 17 different general partners with slightly 17 different ownership structures.
Right.
That's how we were able to do it. I think I love that structure.
Right. And so it gives you the opportunity to let people earn their keep, right? Yeah. Like it's, if you don't perform on fund 2, then why should I include you in fund 3, right? Or 4 or 5 or 6.
Look, it's a lot of time. It's not if they're not. It's not that they're not working. It's like when you're trying to get very successful people to come into one place, most successful people already have a gig going on.
Right.
They're trying to get both of their feet, a cannonball, into your pool, right? But a lot of people can't do that. They can only put one toe into this pool because they got 9 toes in their pool. And so you're trying to show them that it's worth letting all that other stuff go, even though it's been successful. This is worth it, right? And in the beginning, it's no fault. I really still am friends with all those original partners that I shouldn't say a few of them didn't make it to the 3rd fund. But it wasn't because they're not successful in real estate. They just didn't put all their cookies here. And I need a pitcher, a second baseman that isn't playing part-time for the different team, right? I need him 100% here. And that's hard to do. But success really helps as you succeed and you grow bigger and bigger every, month or 2 months. Yeah. The people put more and more into the pool. And once you get successful people into the pool, then the pool just, and that's what happened to us. It just grew.
And it definitely success begets more success, right?
Yeah.
So for those businesses that are not in, private equity or credit or having different, silos of a fund structure. Let's say it's, John and Jeremy's jeans business or John and Jeremy's restaurant or coffee shop or whatever, software business, any of those kinds of things. How do you look for the partner and judge merits of character and things like this going into it when it's not that, okay, if this doesn't work out, I just want to include you on software business B because there isn't a software business B. It's one of the best things that I've heard years ago was that the contracts are for the divorce, not for the marriage.
Yep.
Right? And so it's, how do you go into this if your fund structure was one fund, not 117, how do you make sure that you got the right pitcher and the right second baseman?
I can't tell you because I haven't succeeded at that a lot. A few businesses I have, but and that's why when we opened our funds, we would raise money in a fund for 1 year, and that money was then closed. The investors were closed, and then that fund would go out and deploy.
Yep.
As soon as that fund deployed, let's say 90% or 95% of their money, we would start another fund, maybe doing the exact same thesis, right? And that second fund would have the new set of general partners, same set of general partners that were back here, but maybe less one guy because just couldn't jump in. That's what I'm saying. That you raise money for a little bit of a time, for a year or a year and a half, in your first, and as you get further down the line, it only takes you 6 months sometimes to raise all the money you raise. But in the first, you might be a year to 18 months, and during that period of time, you're figuring out who's going to be in the next fund, and everyone's proving that they want to be in the next fund by their production.
Right. So, talking 20 years ago, 15 years ago, and the lending side of the business.
Yeah.
Did you ever think then that today you would have whatever, 117 or something funds and 20 billion and, 40,000, just it's not unbelievable because I've watched you do it, but it's unbelievable.
When I sit down, I just go, I don't even believe. My original partner, I don't know if you remember the old Austin Powers movie. My original partner, we were in an office, probably it was a 10 by 15 office, both of us, when we first started. And he used to put his finger up. John, we're going to be $1 billion fund one day.
I know who you're talking about, and I can totally
know who I'm talking about, right? I was saying, you shut up for a minute. We've got a closing this Friday. Can you just give me $50,000 by this Friday? Right. $1 billion. But he was like, no, we're going to be $1 billion. And when we got close to that first billion, I was like, what? How much? So let me ask you a question, Jeremy. This is a trick question for you and your viewers. But okay, if you started counting to 1 billion right now, at each second, 1, 2, 3, a billion seconds. How long is a billion seconds? Is it 3.9 months? Is it 9.3 months? Is it 13 years? Is it 31 years? What do you think? What do you think a billion seconds is? First guess.
6 months, something. I don't know.
It's 31.9 years.
Wait, what? So if I started counting to 1 billion by
31.9 years, it's almost 32 years. 1 billion seconds.
Wow.
Yes. That's what I thought. My face looked like your face when I realized that. And so when people use the word billion, not trillion, billion, they're misusing it all the time. Because they say, oh, there's a billion of those, there's a billion. No, there's not. You guys don't realize unless you count it, you don't realize how big a billion is. And so when we hit $1 billion, I tried to figure it out. I said, I wonder if I started counting, I'd be here 32 years from today getting to 1 billion, right?
Times 20.
Wow. That is, my head about exploded, right?
That's
so, and I think when people win the World Series a couple times in a row, I think they the same thing. Go, wow, how did we get here? How did we get here? It's so hard to have a season that's that perfect to get the World Series and do it a second time and a third time and a fourth time. $1 billion is a big number.
That's astonishing.
Yeah.
So, my plans for the weekend is I thought about counting to 1 billion. So I'm not going to do that now, right? Because we're not going to do that now. That's astonishing. So
okay, but there's a subject I want to talk about. I think the viewers will like this, and all my friends have liked this. So let's talk about negative interest rates in Europe.
Oh my God. Okay. Do I need to pour a scotch or something before we start?
Yeah. So
okay.
I'm going to rant a little bit here, and I know I'm going to rant, but I got to throw some things out so people can understand, because I've been studying this for about a little over a year. All right. So December 2018, the Federal Reserve, smartest guys in the world, smartest ladies in the world, they come out in December 2018, and they say, we're going to lower interest rates. No, so we're going to increase interest rates 3 times in 2019.
Right.
This is December. Less than 45 days later, they say, sorry, we made a mistake. We're not going to raise interest rates 3 times in 2019. We're going to lower interest rates 2019. So they did a reverse, right? They didn't hold, they reversed, right? And in 2019, they lowered interest rates big time. And I'm going, wait a minute, I'm an economics major. Something's going on. So then in March or April 2019, I read this report. There's $3 trillion of government bonds in Europe being traded at 0 or negative.
Negative, yeah.
And you're like, what is, I've never read in 20, 30 years since college, I've never read a book, a chapter, even a paragraph on negative interest rates. What is that, right?
Right, doesn't even make sense.
Doesn't even make sense, right? Why would you buy a bond from a government that if you buy it, you're guaranteed to lose money mathematically.
Right.
Why? Why would you do this? So I'm like, so summer of 2019, almost a year ago right now, it was $13 trillion negatively traded bonds and derivatives in Europe.
Right.
Okay, that's not a little blip. That's a trend, right?
And these are not corporate. These are government and sovereign.
Government.
Yeah.
Governments are saying to you, hey, I have a bond. If you buy it, you're guaranteed to make zero.
Right.
Or negative.
Or negative.
You're going to pay me money, right?
Right.
So it's kind of like
guaranteed to not make any money. Sign here.
If I put my money in the German bank, they're going to pay me 0% for the money. So thank you for holding my money. And I've got to pay you a little bit every month to have an account. Therefore, I'm making zero.
Right.
That's what's going on in Europe at the rate of $13 trillion. And so the fall of 2019, one of my business partners was in Denmark. They were over there trying to raise some capital. And there was a room, and I wasn't there, but he told me, he said, look, there was an analyst over there, and I don't know how old he was, but he said that he had purchased a mortgage on his home in Denmark, an adjustable rate mortgage, okay? And the rates had gone so far negative in Denmark that his mortgage company was sending him a check every month.
What?
Like $3 or $5 or something, because they owed him money. Is this making any sense?
That's
no.
An alternate universe.
It doesn't make any sense, right? And so then the first corporate bond in the United States was Nestle, the chocolate maker.
Oh, sure.
One of their corporate bonds traded negative, I can't remember when, 6 months or so ago. So it jumped the Atlantic Ocean and traded over here. So put that, just hold that off to the side here. Okay. And I'll get back to it in a minute. All right. So after World War II, the American dollar became the world reserve currency. And I don't know if your viewers know this, but let's say you want to buy a tanker of oil from Saudi Arabia. You can't fly down to Saudi Arabia and pay them in German marks. You have to send your German marks to the New York Fed and have, through the SWIFT system, change them into dollars, then send your dollars to Saudi Arabia so you can buy oil. All oil is purchased in US dollars. Therefore, supply and demand. Right. If there's demand for the dollar stays, right?
Right.
Okay. So the Fed loves this, right? Because it's the world. China and Russia hate this. So obviously, if I ran China, if I ran Russia, I wouldn't like this. Why do I have to go get dollars to go buy oil? So China, since 2009, if you see a chart, their gold purchases every year have been boom, 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 boom. Russia the same way, boom, boom. And I believe, this is my theory, I believe both of those countries believe sometime in the future, someone's going to say, hey, the US dollar isn't as what it used to be. We're going to start buying oil in yen or ruble, gold to back some of our, right? They've been buying a lot of gold. Now, why can China and Russia do this? Well, our leaders in our country, like President of the United States, if you think about it, they're short-term employees. They're here 4 or 8 years.
Right.
Putin's been there like 20-something years. He's going to be there another 27 years, right? Right. The guy in Xi and the guy in China, he's lifetime appointment. So they can have long-term plans, right? To try to dethrone the US dollar from, now I'm not saying the US dollar is going down. I'm just telling you what's happening around the world. And so Europe, to keep everyone using their money, gives it to you at zero. And the Fed saw this and they said, to keep people using our dollar, we're going to have to go down to almost zero and keep it there so people keep using the dollar, not just because of oil, but because of a lot of other reasons, right? Because the Fed's product is the US dollar. They print more, we keep taking it, right? And they print more, we keep taking it. President Obama, he infused about $3 trillion into the economy over 7 years. Okay. President Trump took $3 trillion and infused it in 12 weeks. Right? Okay, so this is the crazy thing about the negative interest rates, right? So remember I told you earlier about the wave? I'm not going to stand there with my hand to stop the wave. I'm going with the wave. So I believe interest rates are going to be low for a long time. I believe personally that they can't say that inflation is 8%. They keep saying for the last 10 years, every year the inflation is 1%, 2%. I believe it's higher than that. But let's say inflation was 8%. That means everyone's Social Security check would have to go up 8%, right?
Right.
That could bankrupt the company. I don't know. But so, but there's a fight and I haven't understand that there's a fight between the argument for deflation and the argument for inflation. You print more money, you should inflate, right? But technology keeps doubling and tripling every 18 months or whatever, and that is deflationary. And it goes on itself, right? Mm-hmm. So, the things that we have that have made our lives so much easier is displacing so many workers over time, and it gets going faster and faster. That's deflationary, and there's a fight between, hey, can the Fed print enough money to keep inflation at 2%? And the arguments are still out there. And most of the people that I talk to and listen to, they believe deflation is inevitable, except for, if you think about it, I believe personally that real estate, gold, and hard assets are not. They're going to go the opposite way. They're going to break at some point and go. But anyway, so that's not the whole thing, but that's a big portion of people I'm studying this trend. And so there's a couple things that has never happened in the world history. Negative interest rates. It doesn't make any sense. The second thing that's never happened is, I just read last couple weeks ago, 51% world have negative reproduction rates for the first time ever.
Having less babies.
Yeah, you have to have like 2.1 babies per female to stay at even, because of people, some kids don't make it to maturity. Okay, Japan's got 1.3. They estimate in 50 years or 60 years the Japan population can be about half if they don't have immigration, right? Wow. So you have about 51% of the countries that are less than 2.1% reproductive. This has never happened before in the history of the world. And the third thing is, as you know, some people oil traded negative for the first time, I think in March.
Right. Tankers of oil. Crude or something, wasn't it?
It was crude. It was negative. It was negative. You had to pay people to take the oil, right? So you have those three things that have never happened in the history of the world. Negative interest rates, doesn't make any sense. Why, negative repopulation rates and negative oil. So therefore, if you have things that have never happened before, therefore things that are in the future, they're going to happen, are going to be bizarre, right? You're going to say, why did this happen? And I believe it's because what happens when you have zero interest rates, zero money, free money.
Right. You get zero interest rates, and so it's historically been great over the last several years for, ABC company it is to borrow. So you've got a lot of the guys in typical private equity are using, I know, dissimilar to you and y'all's strategies, but you guys that are using candidly scary amounts of leverage. And so we're seeing on a corporate side of things, we're seeing guys that everything is trading at 10x, 12x, 13x, this kind of thing. And you're going, how are we substantiating these values? Like, where is this money coming from? Well, the average sponsor-backed company I read last year had 7.5 to 8 terms of leverage on debt. So it's 8 times leverage. You wonder how they trade at 10? They have to trade at 10 just about the debt, right? Yeah. So you're looking at these things and going, it's a double-edged sword, both benefit and curse to being here. Yeah. But I think for you, y'all manage money, and invest on behalf of very, very wealthy, very successful families, as well as pensions and government. You guys have an incredible reputation as an investor. So in this world, it is that we're now finding ourselves in, just like you said, that we're probably going to be in this negative interest rate-ish type world for some period of time. The old watering holes it is for yield are kind of drying up. Like most of the dividend paying stocks have either been cut in half or gone away. Treasuries are crap. Bond yields are down. And so whether it's Bob and Mary Smith trying to fund retirement obligations or ABC pension fund, it's how are you finding yield for these guys in this market that we're in?
So that's my point about the wave, right?
Yeah.
What's happened the last 6 months, okay, or the last year with the negative, so think about this. Me and you in private equity 10 years ago, we're going around knocking on people's doors trying to convince them that they should put their money in alternative investments for yield. Right. And they're going, wait, but I can just buy some government bonds and get a good yield. right now, the people in your town or the people listening in your town, they're running around searching for yield.
Right.
So Jeremy, you run a private equity fund. I run a private equity fund. People are searching for us. They're trying to find an alternative investment that is solid, that they believe they can, they're trying to find. That's one of the waves that have come out of the last year of the world has changed, right? Is, wait a minute, I just have to stand here and people are coming. I just got to, raise my hand, hey, and people want to come talk to you, right? As opposed to, you used to have to, get their secretary, their assistant, get through the phone calls, get a meeting, they would cancel, get it back, right? And now they come to you because they're searching for yield.
Yeah, without a doubt. Without a doubt.
It's a change. It's a change. It's a change in trend.
It's a change in trend. And, the old idea, especially from an investor standpoint, the old idea of the typical portfolio allocation model, that's dead. Like if investors, whether they're individuals or pensions, if we're seeing, I know that you're seeing the same thing is that individuals, big and small, are beginning to increase substantially their allocation towards alternatives, plain and simple, right? You have to.
If you buy a 10-year treasury at U.S. government treasury, which is backed by the U.S. government, which is a great vehicle at 0.7%. And the inflation rate is 2%.
Right.
Isn't that negative?
In theory, you're losing money, right?
You're losing money, right? You're losing money. So, it's a different world with these. So let me give you another scenario. People ask, well, why did some certain stocks go up, right? And I'm like, well, think about this. Corporations can borrow money at almost zero. Mm-hmm. So just think, hypothetically, me and you run a company. It's a public company. You're the president, I'm the vice president, and we have stock options. And you say, what we should do for the benefit of the stockholders? We should borrow a bunch of money, the company, at zero, and start buying back our stock because that will help the shareholder. But no, it helps me and you get our stock options, right? And so Jack Welch did this at GE. He bought back at 22, I think at 24 and at 27. And the stock today is like, I don't know, 5, 6, 7, right? And so, and all those years they were buying back stock, that company wasn't making any more money. They weren't, expanding their profit margins and this and that and this. They were just they just kept buying back stock, kept going up.
Right.
So why you say, well, if the company's not growing, why is the stock going back up? Because we're in a bizarro world where people can borrow. And when you can borrow money at zero, strange things can happen. Like we're buying stock back. So there's just a lot of scenarios that me and you are going to live through the next so many years. And we're going to say, that shouldn't happen, but neither should negative interest rates have ever happened. And I believe somehow they're all connected. Look, I'm an economics major, and I don't know if what I'm about to say is true, but I believe it's true.
Okay.
The price of something predicts something. The price of a bottled water, that price, I don't know what it predicts, but you can figure it out. What does it predict, right? The price of debt as it comes, it's predicting something, right? Mm-hmm. I believe price everywhere predicts something. Now, it's very hard to figure out what it predicts, but when interest rates are zero and negative in Europe, it's predicting something. And maybe the negative birth rates and the negative interest rates and the negative oil aren't connected, but I believe I'm not really sure how.
Somewhere they are.
Yeah. Price predicts something.
Yeah.
But that means the world is going to be different going forward than it has been in the past.
Well, I mean, we started this conversation with, every 10 or a dozen years, there's a change. There's a moment of impact it is that's creating opportunity. And you've done well at that several times.
Few of them, yeah.
Now we are in Corona world, whatever we call this, right? Like I think that everybody on a macro basis thought that there was going to be some degree of a correction, a change, an impact of whatever, define it as you will, right? I don't think anybody thought it was going to be a giant flu bug or something, right?
Yeah.
But considering the world it is that we're in, and then map that back now to, you've got companies across the country, that their employees are home and that are saying, well, hell, I don't know if I need 10,000 square feet in downtown LA at $60 a square foot when all my employees have been home for 60 days. And, I don't know about that going forward. And I don't, right? Like the world for how it is that we're thinking about things is different. So you've done very well at seeing where things are coming. And so where are you seeing, not only for you and your businesses and your funds, but where are you seeing opportunities come over the next 3, 4, 5 years?
So as you know, we have office buildings. We have large apartments complexes, large senior living communities, and large office buildings, debt and equity.
Right.
So our theory, and this is the same basic argument we had in 2009, because people were saying, well, people are going to work from home. They're not going to come back to offices. Let's just take the tech industry, easy one. Take 100 companies. 50 companies say, you know what, all the workers can work from home. And 50 companies say, no, we're going to require everyone to come back to the office.
Mm-hmm.
Give those companies 2 years. We believe the people in the offices will be way ahead of people not in the offices, because of all of those small conversations around the water cooler, all of that institutional knowledge coming from senior management to junior management, all those little ideas that collaborate, right? We believe that will happen over time. But people might try. They might say, you know what, we're not going to go back to office. We're just keep everyone at home because it's working great for us. Right. And we believe that's true if all of your competition stays home. But if your competitors come back to work, give yourself 24 months and we believe you're going to find yourself a lot further back in most, like, especially tech, because tech moves so fast.
Right?
That's one of our arguments there.
Yeah. And so we started this, too, in talking about the fact that for you and your portfolio, like, even though you would almost say that you're kind of living in the eye of the storm. Like, I recognize the crazy going on around me, right? I recognize the storm and the stuff flying around, but for you and your funds, you said, I mean, still performing, still growing, still like no complaints. Can you speak to that 2 seconds?
Yeah, well, so we're not a high flyer, but we're not a low. We don't, it's just our nature of our business. We're kind of a, resistant to recession kind of thing, because we're doing not the A class apartments mostly. We do mostly the B plus apartments, right? So if the economy gets contracted, the people who are in A apartments move to B apartments move to C apartments, right? So we're right in the middle on all of our assets. We're typically not building the Ritz-Carlton type, we're the working class apartments, and senior assisted communities and office buildings. We're not the highest building in Manhattan type office buildings,
Right.
Even though we do a lot of office buildings, but we're not on that AAA class. So when a recession comes, our portfolios hold up pretty well.
Right.
But I'm sure there's other companies making better returns, but we're just kind of like right in the middle. And that's been our longevity. And that's why I believe a lot of our institutions, pension plans, and high net worth individuals, they just like having a portion of their money with my business partners, because they're such a great team of business partners.
So 2 things. Is there, looking back at, this last 20 years and seeing where it is that you've done, I was going to ask you, what do you feel like it is that you've done right? And I know the answer to that question is really just invest in people and surrounding yourself with the best. Is there something that you wish you would have done sooner? Like, I waited too long to do this. I wish I would have done this a year before, or 2 years before, or something.
I wish, but I don't think I had the institutional knowledge to do it. Of course, if I can go back in time and educate myself, but it took me a while. I ran my own business. That first business was successful after about 9 years. Then I was a stockbroker for a little while, about 3 years, and I ran a broker dealer, and I got the securities industry. And then I was a COO of a small public company. I understood the SEC, and then I did mortgages and lending for a while, and before I started my first fund. So those 4 things, I had to get institutional knowledge to really spark that first private equity fund. So yeah, I wish I could have started a private equity fund earlier in life, in my 30s, right? Or even in my late 20s. It'd been great. But I didn't have anyone to teach me. I didn't understand how it works. I just had to kind of figure it out myself, because there's not a lot of people walking around saying, hey, you know what? I run a really successful private equity fund. I'll teach you everything I know. There's not a lot of people doing that.
Not a lot of those guys out there. So, all right. Well, let's wrap up with a couple of questions, and this is really more for John, right? Just you personally, right? And so, I think a lot of times people would see you or somebody like you, it is, with the success it is that you have, that, you maybe don't worry necessarily about the things it is that most people worry about anymore. Everybody's got worries and stresses, right? But once that stuff is kind of out of the way, like you've accomplished probably more than most people could ever dream, maybe even that you dreamed.
Yeah, that's right.
What keeps you getting up and fighting and lacing your boots up and still working 6 and 7 days a week and still hustling for it? What keeps you motivated to do that?
I think it goes back to just when I was in college, my last year of college, I had, one baby boy and I had another baby boy on the way. I went to school nights to finish my college degree. I worked 40 hours a week in construction. So I was busy back then, right? And when I got out of college, I want to run my own business. So I got to work my day job to take care of my family and work my business at night and on weekends. And that just kind of rolls over. So it's just kind of, you built a habit of just focusing on that, right? And so now it's a long habit, but of course I don't work as hard as I used to work because, I don't think anyone can work that many hours for that long of time longevity, right?
Right.
But it's more of, you have three things in business that you want to make sure happen. One, you want to have a great product, meaning the people who rent from us or people who borrow money from us for loans they enjoy working with us and they like the product that we give them. Secondly, you want your employees to like where they work. They're excited about what they do. And third, you want to give returns to your investors. So those are all three things. If you ever start a business, all business people want to do all three things at the same time. Tesla is a great company. People love their product. The employees love where they work because of what they're doing. But Tesla has not gotten to the point where they can give returns to their investor. Now, sure, you can buy the stock and go up, but there's no returns going to their investor. So they're doing two of the three, right? Our company that we put together, my brilliant business partners and personnel, we do all three at the same time. And so keeping that integrity and keeping that going is what I think brings me, anyway, that I can do all three at the same time when most companies can only do one or two of those things at the same time. And they kind of alternate sometimes, between those three things. So I think that's the key for me. If you show me the people who you hang out with, I can probably tell you where you're going to be in 5 years.
Yeah.
The people who I have hanging out here, the employees, my upper middle management and my partners that are here, they just inspire, they inspire you to do a lot of things in life, and not just in business, but personally. So I think that's a long answer. I don't know if I answered correctly, but that's kind of it. Yeah.
Great answer. Yeah. Great answer. So everybody has a different definition of what success means.
Right.
And when you're young and broke, it probably means a big house and a fancy car, right? Yeah. As you get a little bit more experience, you realize a lot of those things are not as important as they were 20 years ago or whatever. But for you now, how would you define success for you personally?
Well, yeah, success is family first, I think. I have my kids and grandkids. They all live within 15 minutes of me.
Awesome. Wonderful.
I see them a lot. Come over swimming, or we do stuff with them, and do a little boating with them or whatever. It's fun to have. So that they are all contributors to society. They're good people. They understand life. They've been trained well, and they're all contributors to society. That, I think, is the core of success, right? And I think a fundamental thing. So if I can maintain that for the rest of my life, I think I'll be successful. Now, if you can add to that financial success or success in other areas, being healthy, financial, mentally. But I see some people that get to our age and they don't ever read another book, right?
Yeah.
They don't search for, they don't have a habit of trying to search for new information and simulate. They just are coasting, right? And I kind of feel sorry for them because I think they're missing out about life, right? About there's so many things to know on this earth, right? And there's so many interesting things that you never would have thought that you could ever realize. And there's so many people that, when I went to school, the computers were just getting going when I was in school. And, to write a paper or out, I just couldn't ask hey, can you tell me the answer to this, right?
Right.
I could go to the library and have the university library and have my library card and go through the Dewey Decimal System and find the book and
oh my God, now you're going old school with the
book and go down to find one reference for the paper that I'm typing for my university. Really. And now people just say, hey, can you tell me this? And it tells you where it's at and you just go get it. It's just, there's so much to know. So I think that's part of I believe successful people are constantly learning about this planet, this world, and this universe. And it's absolutely, it's actually fun to do. Yeah.
Love that. All right. So if you could give John, the 20 years ago John, advice. So looking back on yourself 20 years ago, what advice would you give yourself? What advice would you give yourself then?
I'm trying to think. There's like 10.
Great.
I could travel back in time, right? And I could just advice, not anything. But man. Well, I would say, I would tell myself, don't invest in that business, don't invest in that business.
All right.
I learned from those, right? You learn from your mistakes. So if I tried to go back and change me, I might not be where I'm at today. If I went back in time and I took away the failures, right, that I had, those failures, I learned something that helped me succeed now, right? So I am a result of failures and successes combined and knowledge from those failures and successes, right? And so I wouldn't want to, because I have I'm successful financially, my family, my health, and so I wouldn't dare try to change it somewhere totally different with a small change.
You know what? That's a fantastic answer. I've never thought about it that way. I mean, we ask everybody, what kind of advice would you give yourself, right? And you hope to relate it back to give yourself some type of pearl of wisdom or something it is to make the journey easier. And what you're saying is you don't want the journey to be easier, right? The time in the gym where you're sweating and you're hurting is what makes the muscles that you use later, right? I mean, this is these experiences, it is good, bad, or what made the John today.
But educate. Look, educate. I tell my kids, you never lose educating yourself. If you go to a weekend seminar that someone's teaching, and you pay $300 to go to the seminar, you might get this much, but at least you're better than zero, right? Yeah. If you go to college for 4 years and you get some, let's say you don't get, but you get, maybe it's very expensive, but you got something here, right? If you pay for education or you spend time educating yourself, I don't think you ever regret it. You do have better education over here or maybe over here. You can weigh it. I should have done this better than this because I'd have been educated faster. But even this over here is still good because it's more than zero. And I believe that educating yourself about all subjects in life is the one way that you can fulfill your potential and you can succeed.
That's fantastic, Joe. Well, so for those people it is that want to learn more about you or what you're doing, anything like that, where can they find you? If somebody wanted to get in touch with you, how would they get in touch with you?
Yeah, a couple ways. Bridge Investment Group is my company that I co-founded the funds with. I'm there. You can go there. Yeah, that's probably the best way. Yeah.
Perfect.
And, but you can just ask me back, and we could have an answer. Then the live people could just type in questions and stuff. That's
perfect. We can do it that way. I like that one even better.
That's pretty fun. Yeah.
Like that one.
How about you? How about before we go? I've got to ask you some questions. I know you are your funds are doing well. You're growing.
Yes.
What's been your? I got about 4 more minutes. I got to go. But what's been your challenges and what's been your successes? How have you weathered this last year?
Sure. So I mean, for us, we're trying to we made that transition after being kind of the investment banker, broker to the stars kind of a guy to investing principal capital, my own and our investors. And so it's a different world acting as an arranger of capital than doing it on your own, right? It's both more exciting and scary at the same time, right? Because now it's at the 2-yard line, I'm writing the check rather than, coming to you or coming to another investor and asking for them, right? So it's the opportunity to see if you're as smart as you think you are, right? Because now you're going to be held with this. I think that's one. We spent a bunch of time really making sure it is that we laid the foundation correctly for what it is that we're doing. And so we've gotten the funds, approved on Schwab and Fidelity and all the major custodians. It is so when we're talking to the RAs and wealth managers and old rich guys and this kind of a thing, that we've checked that box for some degree of institutional validation. We have over-invested on an infrastructure side of hiring the best auditors it is that we could find. So, and I remember having these conversations with you is that you want to, at the start, candidly kind of overpay for some of this stuff. You'll get the best pitcher, right? And so we hired Grant Thornton, which is well overkill for what it is that we want to do. But, it was either going to be a Grant Thornton or a KPMG or a Deloitte or somebody like that. We're doing the same thing with our TPA right now. I do not need a TPA. It makes absolutely zero sense for where it is that we're at. But that's another one of those kind of foundational cornerstones for us that's important long-term that on our funds balance sheet now doesn't make sense. Long-term, I think it will be critical.
Yeah.
The COVID world is changing some because, normally I would fly out and see you in Salt Lake, or I'd go to New York and see some of the guys, or LA and this kind of a thing. And that's different now. You're no longer, flying across country to have 4 dinners and stay in a hotel and do all these other kinds of things and fly back, which is probably good because if you think about that, God, we just wasted a lot of money.
I know we wasted a lot. Yeah, I agree.
God, we wasted a lot of money, right? And so, but when will it normalize the fact that doing a meeting to raise capital or underwrite a deal over Zoom be considered the same when I can't hug you, I can't shake your hand, I can't break bread with you, I can't see the intonations in your voice and the inflections in your face when you're saying these things, and I still have to develop a degree of credibility for you to write me a $50 million check. How do I do that over Zoom? Yeah. So that for me, candidly, I'm still learning.
Yeah.
I'm still learning.
Yeah. We're all still learning. Yeah.
Gotcha. Yeah, we're all still learning. And so I'm trying to figure those things out. And then I'm also trying to figure out, candidly, I'm investing in the team and surrounding myself with the best people that make up for my weaknesses. And so that right now is what's keeping me up at night, is making sure that I'm bringing the best people around me, candidly, because I think about you a lot of times and the people it is that you brought around you. And so I'm trying to do the same.
Yeah. Great, man. All right, I got to go, but hey, let's do this again sometime.
Thank you so much, man. I sure enjoyed the time. I really, really appreciate it. It was great. Super excited about it.
Okay, man.
All right, my friend. Be well.
Right.
Thanks for listening today. This has been the Jeremy B. Hill Show. If you liked today's episode, go on and give us a 5-star review. Not 4, but 5. And even more importantly, share it with somebody else. This is Jeremy B. Hill. Your success is waiting for you, but it's not going to wait forever. Go get it.